Hi everyone, today in this video we'll discuss about financial inclusion. What do you mean by financial inclusion? Why it is essential? What is the status and challenges of financial inclusion? We are going to discuss everything about this particular topic in this video. We'll also discuss about an index that has been recently introduced by the Reserve Bank of India that will measure the extent of financial inclusion in our country. So let's begin this topic from the concept of financial inclusion. First, we'll try to know the meaning of this particular concept. When we talk of financial inclusion, it simply means the process of bringing every segment of society, especially the poor one, under the ambit of banking and financial services. In other words, it is the process of providing banking and financial services to each and every segment of society, especially the poor one. We'll try to understand this concept using the example of our economy. We know that we are a poor economy. Here a large segment of society are living in destitution and poverty. The income is very small, so small that they even cannot fulfill their basic needs of life. And it is obvious for them that they do not have the basic bank account even to deposit their money. And in the times of financial needs, rather to raise money from the banking system at low rate of interest, they raise them from the private money lenders at a very high rate of interest. So we find that this poor segment of society have been left outside the ambit of banking services. They are not enjoying the benefits of services of deposits or services of loan or credit. What else we know about these people? We know that these people are not economically protected. They do not have insurance against their illness or unemployment or their untimely demise. So if any of these unpleasant situations occur to them, that makes the lives of their family vulnerable and worse than before. So a very large segment of our society have been left outside the ambit of banking and financial services. They simply do not have the benefits in terms of facility of deposits or facility of loan from the banking system. They do not have the benefits of insurance. So they are vulnerable segment of our society. But now let's suppose the situation start changing and we start opening the bank account for all this group of people. We start giving them the facility of credit. Now government start giving them insurance at lower premium. So what is happening is called the process of financial inclusion. It is the process of ensuring that each and every individual, especially the poor one, to have the banking and financial services with them so that they can have the benefits of all these services. So basically financial inclusion refers to the situation when people have access to a wide range of financial services and products to fulfill their financial needs. But now we'll try to understand why this is essential. Why it is essential for the government that everybody is brought under the ambit of banking and financial services. So the first benefit of financial inclusion is that it's going to increase the resource base of our country. The resources of our country is going to be increased and those resources can be put to productive uses like investment and productions, creating millions of jobs in our country. So how this will happen? We know that under the process of financial inclusion, a large segment of societies are offered banking services. Now they can deposit their savings or money with the banks, and that's going to increase the resources in our economy, and those resources now can be put to investment or productions, and it will create jobs for the economy. According to Reserve Bank of India, we are losing out almost 1% of our GDP because we have a poor record of financial inclusion in our country. But once the government and the Reserve Bank of India get successful in bringing all the segment of society under the ambit of banking services, obviously more deposits, more savings will come forth and that will obviously augment the size of resources that we can use for the sake of productions and investment. Second benefit is that now households in our country, businesses in our country will have the options to raise the funds from the banks at low rate of interest. So that's going to improve their economic lives. Today we know that a large number of people in our country, they have not been brought under the ambit of banking. So they are dependent on private money lenders from where they raise money at a very high rate of interest. So they are not able to improve their economic situations, as they have to pay a very high rate of interest for raising the funds they require for their businesses, for their household uses. But once they have been brought under the ambit of banking services, obviously this is going to change their lives, as now they will have to pay a very low rate of interest for raising the funds for their uses from the banking system. Third benefit that we'll have as a result of this financial inclusion is that it's going to mitigate the risk of lives. We have many kinds of risk. Risk of unemployment, we have the risk of illness, we have the risk of untimely demise. And all these risks to a large extent can be avoided or reduced simply by buying the insurance product. We can have insurance against our illness, we can have insurance against our death or our unemployment, and that's going to protect our economic lives. And the benefit that we'll get as a process of financial inclusion is that now we'll be more socially and economically secure, and all this will lead the economy towards inclusive growth. But now we'll try to know what is the status of financial inclusion in our country. You can see here that as per census 2011, as per the census of 2011, only 58.7% of households are availing banking services in India. You can see here that the census of 2011 says that only 58.7% of India's population are availing banking services. More than 40% of India's population are still outside the ambit of banking services. They neither have the facility of deposits nor have the facility of availing credit from the banking system. As per NSSO's 17th round of survey, non-institutional source of credit accounts for 51% of total credit. This is as per the National Sample Survey Organization's 17th report, and this report says that only 49% of credit being availed is from the institutional sources like banks. 51% of total credit are raised from the non-institutional sources like money lenders. So you can think of the people living outside the ambit of banking. You can think of their economic situations as every time they raise money from the money lenders, they have to pay a very high rate of interest. And then you can see that insurance penetrations in our country. Insurance penetration is the percentage of insurance premium to GDP. So this percentage is only 3.76%. That means if our GDP is 100 rupees, only 3.7 rupees is being spent for insurance premium by people. This is what we mean by penetration of insurance in our country. So penetration of insurance is defined as a percentage of insurance premium to GDP. And here it is 3.76%. That means out of 100 rupees as our GDP, only 3.76% is being spent by people on buying insurance product, in paying the premium of insurance product. And it's much lower as compared to the global standard, which is as high as 5 to 6%. And another yardstick of performance of insurance industry in our country is density of insurance. So density of industry, that is also called density of insurance, that is also called insurance density. Insurance density is, you can see, insurance density, which is the percentage of insurance premium to population. This is also called per capita insurance premium. So per capita insurance premium in our country is only $78. Global standard is as high as $350. Here the per capita insurance premium that is being spent in our country is only $78, while the global standard is more than $350. And as compared to our counterparts like China, South Africa, we are still much lower. So all these statistics or data indicate that we have a very bad record of financial inclusion. A large segment of society are outside the ambit of banking or financial services. They simply cannot avail the benefits of deposits or credit from the banking system, or they do not have the insurance to protect their lives, mitigate their risk. So now what have been the challenges? What have been the challenges of achieving the objective of financial inclusion? So here the challenges are from both the sides. The challenges are from the people who need the financial inclusion, who need the services of banks and other financial products, and this is also from the institutions that are responsible for providing these services to people of India. So we'll first try to see the challenges from the people who need the financial services in our country. You can see the first problem with them is that the income and assets are very less. You can see the third point. This is the paucity of income and assets. Paucity of income and assets. If you do have very low amount of income or asset size is much lower, obviously you may not have the benefits of bank account, or your collateral is not sufficient to persuade the banks to give you the loans at lower rate of interest. So you could be simply out of the banking services. You're poor enough to avail the benefits of banking. You cannot purchase any of the insurance product for yourself. Can save money for your future uses. So the paucity of income, paucity of assets is one of the main and important reasons behind the poor performance of financial inclusion in our country. And not only that, we have the problem of financial illiteracy also. People are not financially literate, and in the ignorance about the financial products and services, even though they may have the income or the resources, they do not enjoy them. They have been left outside the ambit, as the their awareness about the financial products available in the economy is much lower. Then we have seen that the number of banks in our country is very less as compared to the size of population, and this is especially problematic in rural areas, where we find that only 37% of commercial banks are present, and they are fulfilling the needs of 71% of India's population. So distance of people from the banks is very, very high. And due to this large distance of banks, they simply do not want to open the bank account or avail the credit from the banking system. What else? Then we have the gender inequality in our country, and that basically push the woman outside the ambit of banking and financial services, and then lack of proof of identity. Even today, though we have been able to provide Aadhaar card to a very large segment of society, even today we have the problem of proof of identity with people. They simply do not have the required documents to prove their identity, and that obviously do not allow them to avail banking and financial services in our country. And it's not only from the people side. We have the problem from the institutions that are responsible for providing the banking and financial services. And the first problem is a very high cost of financial services and products in our country. We have not been able to engender competitions that can bring down the cost of banking and financial services in our country drastically. We find that the bank and other financial institutions, they are operating with a very high cost of transactions, and that obviously increase the price at which they would like to provide these services to people. And obviously, being poor people, we cannot avail those services at a very high cost. So people remain outside the ambit of financial and banking services. Then we have the regulatory problems, we have the poor technology, and sometimes it is the inadequate supports from the government that is responsible behind poor performance of financial inclusion in our country. And now we'll try to see what have been the efforts so far made by the Government of India and Reserve Bank of India over the last 60 or 70 years. So you can see here that we have been expanding the banks in our country, especially after the nationalization of our banks.
Okay.
So this has been happening in our country. So banks were nationalized in 1969 and the second phase of nationalization was in 1980. And after this nationalization of commercial bank, the Government of India decided to increase the number of branches of commercial banks. Especially the banks were asked to open their branches in unbanked and rural areas. So before nationalization, the presence of commercial bank was just 22% in rural areas, which increased to now 37%. So the number of banks has been expanding in our country, and that's bringing more and more people under the ambit of banking and financial services. So this was taken care of by the government, that we increase the branch on constant basis so that unbanked people can be brought under the banking or financial services. Secondly, you can see that we started the provision of PSL or priority sector lending, and this PSL was made compulsory for commercial banks in 1974. It was made compulsory for commercial bank in 1974. The banks were asked that a part of total deposits they disperse in the economy has to be given in the priority sector. So now this requirement is 40%. The banks are required to provide 40% of their credit to priority sector of the economy. And in these priority sectors, we have the agriculture sector, we have the small scale industries, we have the education sectors, we have the housing loan, we have the women, we have the weaker section of society. A long list are there that has been included in the priority sector, and it's compulsory for the banks that they provide at least 40% of their credit to all these sectors, so that the poor and vulnerable segment of society can avail the benefits of bank credit at much lower rate of interest. Then you can see that lead bank scheme that has been abandoned. Now we don't have this scheme. The scheme was launched by the government in 1960s only, so this has been abandoned. But this effort was made by the government so that the vulnerable and unbanked people can be brought under the ambit of banking services. Then you can see that here SHG, self-help group centric microfinance program has been launched. Now microfinances have been given to self-help groups. It's not given on individual basis, but those individuals have been grouped into one self-help group that are linked to some productive activities, and these groups are being financed by the banks for their economic activities. So this has been very remarkable in bringing the people under the ambit of bank credit, and they can now avail these benefits of credit at low rate of interest and enhance their activities. Then we have this no frills accounts. You can see here the accounts, no frills accounts were allowed to open for the people having no basic bank account with them, right? And basically this was given a boost when Jan Dhan Yojana was started. Jan Dhan Yojana was started in 2014. We know that under this Jan Dhan Yojana around 38 crores bank account has been opened. And then Kisan credit card, it is one of the important way of providing credit to poor farmers of India. It is an important way of bringing them under the ambit of institutional credit. Till now they were mostly dependent on money lenders, but now the Kisan credit will allow them to avail the credit from the banks at low rate of interest. And we know that all these efforts was given a boost with the introductions of Aadhaar card. Aadhaar card made the identification of people much easier, and this allowed them to avail a host of banking and financial services without much difficulty. But now we'll see the financial inclusion from the perspective of different player. As I told you that Reserve Bank of India has recently launched an index that will capture the extent of financial inclusion in our country. But it's not the first time that we have such kind of index. We have been using many of the indices to measure the extent of financial inclusion in our country. So what are the sources that indicates you about the status of financial inclusion? You can see the population survey of 2011. This is the latest one. We can use the population survey to know about the extent of financial inclusion in our country. As I told you that according to population survey of 2011, only 58.7% of India's population are availing the benefits of banking services. Then second one is NSSO survey. This is the National Sample Survey Organization survey. This is the National Sample Survey Organization, and this conducts survey on many aspects of Indian economy. It also makes survey about the financial inclusion in our country. Then CRISIL, which is one of the credit rating agencies of India, this has also been using an index to know about the financial inclusion in our country, and the index published by the CRISIL is called Inclusix. This is the index published by the CRISIL, which is a rating agencies. Then Reserve Bank of India has been publishing the report for a very long time on the status of financial inclusion in our country. And we have the NABARD All India Rural Financial Inclusion Survey. NABARD comes out with survey, and the last survey was brought out by the NABARD in 2016-17. And this All India Rural Financial Inclusion Survey, throws light on the status of financial inclusion in our country. And you can see we have the financial inclusion index, which has been recently launched by the Reserve Bank of India. As I told you that Reserve Bank of India recently launched this index to measure the extent of financial inclusion in our country. So in this topic, we'll briefly discuss the important features of this new index launched by the Reserve Bank of India to know the extent of financial inclusion in our country. You can see that this index has been introduced by Reserve Bank of India to capture the status of financial inclusion in our country, to know about the extent of financial inclusion in our country. And it's a composite index. It's a composite index in the sense that the index will capture not only banking services under the ambit of financial inclusion, but also other financial services to know and construct about the status of financial inclusion in our country. So it's a composite one. Then you can see that it is based on three parameters. The Reserve Bank of India will construct and publish this index on three parameters. The first one is access, second one is usage, and third one is quality. And they have been given different weightage. As you can see here that access has been given a weightage of 35%. In the constructions of this index, access has been given the weightage of 35%. Usage has been given the weightage of 45%, and remaining 20% weightage has been given to quality. So three things about financial services and inclusion would be monitored by Reserve Bank of India. The first one is access. The Reserve Bank of India will construct this index on the basis of whether people do have access to financial services or not. And secondly, Reserve Bank of India will monitor the situation of usage. How much of services are being used by the people. They may have the access to banking services, they may have the access to insurance products, but whether they are being used by the people or not. Uses are very important. It's not only about making those services available for the economy. We have to ensure that people use them for their benefits. So uses will be one of the criteria on which this index will be constructed and published by the Reserve Bank of India. And third one is the quality. Quality is very, very important. How much, what kind of quality of services are being provided to people, whether they are satisfied with this quality or not. On these three parameters, Reserve Bank of India will now construct and publish this index every year. And here the extent of financial inclusion will be measured in a single number. Here the extent of financial inclusion will be measured in a single number from 0 to 100. 0 means there is no financial inclusion at all. People have been completely left out the ambit of financial services. While the number 100 will indicate perfect financial inclusion. Everybody have been included. They all have been using the financial and banking services, and the quality is superior. So the numbers would be from 0 to 100. You can see that the index number has been published by Reserve Bank of India for the month of March 2021. And this number is 53.9%. 53.9. 53.9. Here the financial inclusion number has been given 53.9. And one more important thing to remember about this index is that there is no base year chosen by the Reserve Bank of India. As we know that when we construct an index, we have to choose a base year. But here no base year has been chosen. That means here the combined efforts of all the institutions working in this direction for a very long time will be taken into account. So when we say that the number is 53.9 for the month of March 2021 or for the year of 2020-2021, that means all the efforts undertaken by various institutions working in the direction of financial inclusion over the last 50 to 70 years has been considered by the Reserve Bank of India for making this index. And finally, the point that you need to keep in your mind is that it would be published by Reserve Bank of India every year in the month of July. So this is all about financial inclusion and the index that has been recently launched by Reserve Bank of India to measure the extent of financial inclusion. Thank you. Jai Hind.